Guten Morgen.
Good morning. We normally like to start our day at the office with a coffee. It's sustainably grown, fair trade, and comes in a reusable cup. So having some sustainable coffee is rather straightforward. But what about responsible investing with ETFs? In the same way I look for certain characteristics in sustainable coffee, Xtracker's ESG ETFs select companies based on qualitative and quantitative ESG criteria. Let's start with the E in ESG. How can you make an index environmentally friendly? Take the European stock market, for example. In order to change the traditional MSCI Europe index into a sustainable MSCI ESG Europe Leaders Index, the index focuses on companies with high environmental, social, and governance performance. These are companies, for instance, that extract fossil fuels such as coal or hold major oil and gas reserves. A company would also be excluded from the index if it committed serious environmental violations. Current and projected carbon dioxide emissions are also evaluated, and if a company is overly polluting to the environment, it is eliminated from the index. So, by investing in Xtracker's ETFs which have an ESG focus, it can be argued that investors are also helping to reduce the global carbon footprint. Even with small monthly investments into ESG ETFs, for example, investors can be part of something big. The volume of sustainable investments is growing steadily worldwide. Regarding potential returns, sustainable investing can be interesting. Investment strategies that take ESG criteria into account aim to provide potential returns throughout economic downturns. However, the funds are not capital protected. The Paris Climate Agreement has created a positive political and regulatory environment for sustainable companies in the long term, with targets to tackle climate change. But before making an investment decision, investors should inform themselves about the nature and extent of all opportunities and risks, compare them with their financial situation and goals, and seek advice where necessary. And how do we manage to integrate social and ethical criteria into the indices we utilize? I'd be happy to tell you over another coffee.